Do you have a prediction for the next 3 to 5 years in the med sup market?
Dear. I wish I had that crystal ball. Here's what I probably, if I'm going to be guessing or I was a betting man, you're going to see rates higher than what they are today. And somebody made the comment to me not too long ago. They're like, Mike, I'm a little bit nervous, but, I think this Mets up might become a rich man's game type of thing. You hope it doesn't go that way with society and the senior market, but I could see rates 25, 30% higher than what they are today. You would only think that the insurance departments would probably try and put a stop or at least talk to people that, some of the carriers that had low ball rates for their plan G tried to gain market share. I told somebody the other day there's been about 7 or 8 carriers that have now left the market this year. And I went back and looked at it. 6 of them actually had the lowest plan G rates within the last year or two. Well, you can't see those plans that have those low rates. They're bailing. That doesn't help anybody.
So we can start with you, right? Like how long have you been in the industry and how'd you get to Physicians Mutual?
Oh God. uh, I've been around since 1988. I got recruited right out of college as a New York Life agent,
Awesome.
and I spent 5.5 years there, and then I went to a place called Plan America. It was a joint venture between all the big federal credit unions and um, Century Life of America out of Waverly, Iowa. And they were starting to put financial reps in credit unions, so I did that about a couple years, and then I responded to an ad in the paper regarding Physicians Mutual. And first 5 years, I started off as in product development, actually developing products, things like that. And then that was in '93, and then '98, the head of the whole sales force came to my boss and said, "Hey, we want to stay up. We want to steal Mike, and we want to make him the first ever trainer in the company." The whole field force never had a trainer or nothing. Nobody did training. Everybody just did their own thing
Your
out
own
there.
thing.
Yeah, it was crazy. So
Yeah.
I did that in '98 to 2003, and then they was promoted to. I was the sales manager of kind of for the Nebraska, Iowa, South Dakota region. And it was a division office. We had about 40 offices nationwide where we were always captive, forever and ever. And so we recruited and trained, developed agents, everything like that. No different than, the Bankers Lifes of the world, the New York Lives, Prudential did way back then, Northwestern Mutual. All of us were all captive. And I did that for, oh God, I did that till, that was in 2004. I stayed in Omaha till 2015. And then I had a friend that didn't, he was getting sick and he was the manager down in Scottsdale, Arizona. And he's like, "Oh, Mike, you need to come down here. You do so much training and you do this. And you've taken a bad office to the top and you've led the company forever and ever in sales." And actually, I had the smallest territory, too, of all
Mm.
sales offices across the country. And took it to number one for 7 consecutive years and went to Arizona and then took that one to the top within a couple years, too. And then in about 3 years ago, when they closed our division offices and said, "Hey, we're going to go full blown brokerage," and that's what we've done. And so now we work remote. So
Well,
uh, yeah, but that's kind of what I did beforehand before I became the national sales training director. So it's kind of funny. It's all I'll be 62 next April. So as the company's saying, everything's come full circle. I'm back to
yep.
training, but I used to do that all the time. They used to send me across the country, fly me across the country to do trainings, even at other offices, and to help other managers and things like that. So
What
I've done
was the biggest hurdle for agents that you found getting them up and running?
prospecting. There was
Yeah.
no prospecting. I taught them, and I'd even go to the field. We'd go knock doors. We'd go knock businesses. We'd go. We'd sit and make phone calls. We always had fun Monday night phone clinics. We did Saturday morning phone clinics.
Yep.
And that's back in those days, you were just calling leads or you were calling lists and all those type of things. So we did that, and I taught them how to do that. And every Monday we had class. You had to be in class. You better be there from 9:30 till noon. And then a lot of times we'd have calling, and if you didn't have 10 appointments already set up for the week, you had to come in Monday night and make calls. And so I was
Yep.
always teaching them that activity, and I always told them, you will never ever fail when you have 10 appointments a week. You'll never fail. You'll make more money than you ever dreamed. And it happened all the time. There's a lot
Yeah.
of very very successful agents out there that are been top agents, and um, I enjoyed that. I enjoyed coaching. I was a baseball coach at one time too, so I enjoyed coaching the kids, but also coaching adults and how to sell insurance.
Yeah, it's funny in this business, you don't need a whole lot of skill. You need effort and enthusiasm and a positive attitude, and that'll take you
Oh,
as high
absolutely.
as you want to go.
I always tell people, Jason, I always said, if you give me somebody that's a hard worker, I'll take a hard worker over somebody that's super talented any
Yeah.
day of the week. If they're willing to work at it, they'll do so much better than a talented person that gives up quickly.
Yep. Yeah. It's so true. That's
Yeah.
crazy. I mean, I knocked on doors too, and I mean, knocked on businesses. This was like 15 years ago. So
Sure.
some things never changed. The free stuff is still out there,
Yeah.
the
Still
free
is.
prospecting.
If you just do
Yeah.
it, you just got to do
Yeah. Yeah. Well, that's the problem. That's the hardest part,
it. Is to go
less
do it.
thinking, more doing.
Yeah.
So what's Physicians Mutual like where you guys kind of have positioned yourselves in the marketplace is you have that patented innovative product, right? With the high
Yeah. The
deductible
innovative
G.
G. Yeah. The
Yeah,
innovative G.
so can you kind of give a brief overview on that and kind of what sets you guys apart from the competition, especially with how volatile the market has been the last
Oh,
2 years with the rate increases?
yeah, and it's still going to continue. Those rate increases aren't going to stop anytime soon. Like you're seeing that with all carriers. I just heard a gentleman just told me that last month alone, 32 companies filed for rate increases in the state of Texas alone.
Yeah,
So you're
yeah,
seeing that stuff still going to continue to happen. With our innovative G here at Physicians Mutual, we came out with it in 2008. It's the patented. So really, what we did was we patented this innovative rider and we added it to a regular plan G. So really, what you have is you have this temporary max out of pocket or temporary high deductible G that after 3 calendar years, it automatically transitions to a regular plan G the rest of the customer's life at about 25 to 35% savings all over any other G out there. So if somebody's willing to take on the max out of pocket of a high deductible G plan, and which I tell people is that 2870 max out of pocket today, Jason, it's less than
nothing.
most MA plans max out of
Yeah,
pockets. And you always got a Medicare paying first, right? After the Part B deductible, then you got 80% by Medicare, 20% co-insurance by the customer. So if you're willing to take on that temporary max out of pocket in exchange for a permanent lifetime of savings on their G plans, the innovative is the plan that everybody's talking about now. It's getting all the buzz in the industry. Companies are. I just on a call a little bit ago with a broker that says, Mike, I keep running into Physicians Mutual all the time, and I've noticed some clients that are older, and man, you guys can't be replaced because man, your G is cheap, which tells me they didn't even have to tell me that they bought the innovative G, which really is a high deductible G, for up to 3 years. It could be 2.1 years. It all depends in that first year
right.
when your effective date is, because most of
Yep.
the time it's a partial year, then you have 2 full years. Converts to that G. People absolutely love it because then all their friends, they have a plan G the rest of their life that's 25 to 35% less than their friends.
And if they took the premium savings and set that money aside, there's no way they would lose even if they hit the deductible.
Not even close.
Yeah.
Not even close. They've saved so much more.
Yeah. Yeah. I mean, can you explain how Physicians Mutual underwriting or their approach to stability compares to the others in the industry, other carriers in the space?
Sure. The one thing I always tell people about Physicians Mutual is our board of directors, the majority of them now, probably there's 9 of them, 7 or 8 of them are all physicians. They're doctors in the Omaha area. They're meeting about every other week with the underwriters, the claims department, staying on top of things. And, of course, we're always saying in the field, hey, can we just take this or take that? Can loosen this up? And they're like, no, no, this has become a bigger claim issue now. They're more expensive. So we have that. We do have 65 and a half to 68. We do have limited underwriting. It's basically about 5 6 questions, and it's mainly the major things that we're kicking out. But also too, we see some of in those earlier years. That's not where everybody's super sick at. It's usually as they get older, right? So, but out starting at age 69 and above, we do full blown underwriting 69 and above. And we don't take any insulin or rheumatoid arthritis. We just don't jeopardize anything. People say, well, why don't you take a little? No, no. Like insulin's a no, no. It's over. And so we're probably a little more strict in that. That helps us with our stability. But plus, we have that in our portfolio. We have the innovative and the high deductible. So in the first, let's be honest, first 3 years or so, especially with that innovative, we ain't paying much in claims unless
Right.
somebody hits the max out of pocket, and then we really kick in. So that really helps our rate stability when it comes to the other products too.
Hmm. Yeah, that makes sense to keep that block stable.
Yeah.
So Texas, I mean, what other markets have you seen or have heard about that are experiencing this crazy rate disruption with
I mean,
Medicare supplement?
you're seeing it in all states, Jason. You really are.
Yeah.
We're seeing it. We're seeing it too. Well, one of the things I can always say is that we talk about it. It was at Medicarians. We see it. Everybody's seeing it. Is people turning 65. The loss ratios for people turning 65 is shot way up. We always thought, hey, get them during open enrollment. They're going to be healthy the first few years. The problem that we're seeing today is that 75% of all people have a high deductible health plan at work.
Yeah.
So they're waiting. Hell, they're 62, 63 years old. They're waiting until 65 to have their back surgery done, to have their shoulder, their knee replaced, all those things. So you're seeing that the claims, back from COVID in the days, they're a lot worse than what they used to be. They're multiplying, and they're more expensive claims, or the conditions are worse. So of course you're seeing that, and just utilization's going through the roof. There's no doubt about it. And hopefully we'll see it, maybe in a year or two, kind of wash itself out. I'm hoping. But you're seeing all the carriers are saying, hey, we got to take big rate increases. We got to do this. We got to do that just to keep up right now. And it's happening in the MA world too. They're seeing what's going on there, and their margins. You've even seen that in the media where some of their CEOs have said we are more concerned about margins over membership. Well, that
Hmm.
tells you something.
Well, you saw that with WellCare last
Yes.
year with Centene.
Yeah.
Yeah, it's funny, we a lot of our ACA clients, they say the one phrase over and over again, age 60 to 64, oh, I'll have to wait till I get on Medicare. Like, oh, I need a knee replacement. I'm gonna wait till I get on Medicare. And like there's this pent-up demand when people are aging in and getting onto the plan the first year.
Oh, absolutely.
Be- Because 9 times out of 10 on the individual ACA side, they're all on high deductible plans.
Yes. Yeah.
So it's like, do I pay $8,000 to get this procedure, or do I wait a year until I'm on Medicare?
You can pay 257 if you want to.
Yeah,
A lot of
right.
Plan G. I mean, it's crazy. You almost wonder is CMS going to need to do something here in the future and have more cost sharing plans? I know they really haven't caught on yet, but somebody that really wants to save a lot of money. I ran into a lady, I don't know who the carrier was. She's only 74 years old. Her premium is already 454 a month for a Plan G.
Yeah.
He's like, Mike, it's just going through the roof. And we tried to get her through underwriting. It didn't work. And she goes, what do I do? Yeah, I'm like, well, you might
Yeah.
have to go to the other side.
To
I
advantage.
don't know what to tell you. Yeah, I mean, but you think about a 74-year-old's paying 454. What will that go if she lives till 80, 85?
Yeah, I mean, it's like they have to go to an advantage plan at that point. It doesn't make sense
No,
to pay an extra $5,500 a year,
no,
and you're never going to get that back in claims. I mean, because the
no.
odds are you're not going to go to the hospital every year for the rest of
No.
your life, you know?
A lot of times, what
S-
we do here at Physicians Mutual, we will at least allow them to go down to a high deductible G. They can always downgrade to a high
From
deductible
the standard
from like
G.
a G, yeah, for like G or whatever. And even if they had an F, they can always go down to a
Hmm.
high deductible G, no questions asked, no
No
underwriting.
underwriting.
Yeah, we allowed them to do that.
Yeah, that's interesting. Yeah, because most carriers won't do that. You
No,
still have to go to underwriting if you want to
yeah.
go from G to M.
But like you said, I'm
Um,
gonna have to call the lady back and say, I can get you basically like a high deductible G for $80 a month. You're paying 454. That's about $370 a month difference. If you took that times 10, there's 3,700 plus another 840. It's about 45. She's gonna save. I don't know
yeah,
what am I saying? 380
even if she hits
bucks.
the deductible $2,000.
Yeah, so if she saves 42, $4,300 in premiums. Her max out of pocket on the high deductible is only 2,870. She's still up $1,500 or more. That's if
Hmm.
she ended up in the hospital. If she don't end up in the
Yeah.
hospital, she'll save a lot more money. And you
Is
know,
your enrollment in the high deductible plan G higher than the regular plan G? Or are you starting to see that shift?
no, no, no. I would say probably what we're seeing about 33 to 35% that innovative G that's patented. We're seeing probably a couple percent maybe in high deductible G, and then we're probably seeing about low 60s for the G, and then a little maybe a percent or two for F is what we're
And are
seeing.
most of your applications coming in from the broker channel? Do you guys have a direct to consumer?
They can buy directly over the internet with the company. I don't know what that is for.
I bet the percentage for the regular plan G is much higher direct
I
to
would
consumer.
I would think too. Yeah,
Yeah,
because there's
yeah, yeah, yeah.
nobody to explain the innovative to them,
Right.
so we don't know what that
Yeah,
means.
absolutely. I mean, I think there's just a huge market for it. It's just education
It
when it
is.
comes down to it for the
Yeah, I'm
client.
doing a big CE coming up in Minneapolis for a big FMO, and the title of it is Education and Presentation Before Product. And
Yes.
really educate them and show them the ABCDs and tell them the difference between the Medicare supplement and the Advantage plan. Let them pick
Yep.
and see what one they like. And but you got to really explain and say, if you go this way and you want out, you only can do this. And if you go this way, and if you want to go back to something else, you got to go through underwriting. And if you can't pass
Yep.
underwriting, then you're stuck. But I don't think most of the people don't get educated that are out there and they don't know. They're
Right.
like, nobody told me that. I hear that all the time.
Yeah, my main goal when I sit down with someone, or as I used to be in the sales a lot more, like meeting clients day to day,
Mhm.
was that you understand why you have what you have. At least if
Sure.
somebody asks you, why do you have that plan? You have an answer. And the answer is not, my friend told me to get this plan, right?
Exactly.
So I think, and that's how we try and train our agents, right? It's like, you show them the differences and the choice. If you ask the right questions, the choice in the end becomes obvious to the consumer because it is a lot of information and it's very confusing.
It is.
Do you have a prediction for the next 3 to 5 years in the med sup market?
Oh dear. I wish I had that crystal ball. Here's what I probably, if I'm going to be guessing or I was a betting man, you're going to see rates higher than what they are today. And somebody made the
Yeah.
comment to me not too long ago. They're like, Mike, I'm a little bit nervous, but I think this Mets up might become a rich man's game type of thing.
Yeah.
You hope it doesn't go that way with society and the senior market, but I could see rates 25, 30% higher than what they are today. I you would only think that the insurance departments would probably try and put a stop or at least talk to people that some of the carriers that had low ball rates for their plan G tried to gain market share. I told somebody the other day there's been about 7 or 8 carriers that have now left the market this year. And I went back and looked, and I looked at it. 6 of them actually had the lowest Plan G rates within the last year or two. Well, you can't see those plans that have those low rates. They're bailing. That doesn't help anybody. I mean, I'm including us, the broker, because then next thing you know that those rates are going to start going sky high. We got to go out and try and find them some other coverage because they're going to be calling about their sky high rate increases. And then if they're uninsurable, then where do we go then? You can't switch them to another med stuff, and that's probably what they want. So
Yeah.
I hoping that the overutilization comes down a little bit, and we get some of the claims under control. But like you said, Jason, I really don't. In the next 3 to 5 years, that's you're talking about me, and what I'm
Yep.
seeing, and like you said with the ACA and all that stuff. I don't see deductibles going down in the ACA world or the group insurance world. And
No.
so you think those deductibles are going to go higher, those premiums are going higher. We've never seen it in our lifetime where our health insurance premiums go down or our deductibles go down. They're always going up on both sides of the coin there. And so
Yeah.
hopefully you don't see as much as what we're seeing today, but in my opinion, I think you're going to see a little bit higher rates on Medicare supplements than what you see today. If a regular G's on average 140, 150, that could be 180, 170, 180 in the future, 190 even, if that's the case. Because if you really think about it, look how rich that G plan is. I mean, you pay the Part B deductible and that's it. That's
Yeah.
ridiculous. And
Yeah,
You'd
it's
almost hope,
nuts.
yeah, you'd almost hope that CMS or somebody could talk to CMS and say, hey, we need some better cost sharing options out there for these people.
Yeah, if you could get higher cost sharing and then on the flip side, lower the cost of care, then
Yeah.
we could get the rates down. But those, two sides of the industry working together has been a challenge.
Yeah. And then you
So
almost see, will you see Plan G in the future almost get to be like Plan F, where you have to be eligible for it prior to a certain date, or you had to be 65. So you almost wonder, is that where Plan G is going to go? Because I don't think you can continue to have Plan G like it is. That's just my opinion.
yeah. Yeah. Well, when I would talk to clients, I'd always tell them like, I show them rates of all the carriers. Like you want the lowest company, the lowest rate, you always throw that out because they're usually new to the market. So
Sure.
they're coming in, they're trying to hit their enrollment numbers, and then their rates are going to go up by much higher percentages than everybody else, or they exit the market altogether, and you're
Sure.
stuck in an aging block and you
Sure.
can't get out.
Yeah.
So, but I see a lot of agents make that mistake. They're just selling the cheapest plan, because
Yeah.
they think, well, it's all the same. What's the difference?
Yeah.
But there's a big difference in the rate stability.
Well, I
And I
think,
think, yeah, go ahead.
yeah. Well, I was going to throw out too is the birthday rule. I think the
Yeah,
birthday rule is going to kill some carriers. There's no doubt
yeah,
about it. I understand, in talking to a lot of people in birthday rule states, and the broker will say, Mike, this is such a great thing, and man, I can really help my customer, and that's a true fact. They can sometimes get the customer a lot lesser rate, but what they don't understand what it's doing to the carrier. The carrier is taking on a substandard risk most of the time. Somebody that's had claims that's older, and those claims are a lot higher, and all they're doing is buying claims. Well, if we really, really price the products like they probably should be, those poor people would be paying a heck of a lot more for their G plans or their F plans than what they're paying today. It's going to skyrocket. So what makes me nervous is, yes, you got the carrier problem, you got loss ratio problems and things like that with the carriers. But on the other hand, who's going to pay for it in the long run? It's going to be the consumer. The consumer's going to pay for it because now those rates are going to have to go way higher. I mean, there's no doubt. We got to start charging a lot more. Well, if you start doing that, then what's going to happen is, then I'm even scared that all of a sudden you're going to have such low commission or non-commissionable med subs for the birthday rule states almost. And that's just my opinion. But you can see it. It's happening in the MA world. Why wouldn't it happen in the supplement world unless the department says you have to pay full commissions? But because as soon as a department, especially in a birthday rule state, you don't have to pay full commissions, most carriers aren't going to pay full commission.
yeah, yeah. Well, I had an agent ask me the other
And
day,
then they don't want to sell
what carriers are paying the best for guarantee issue and birthday rule
it.
states? And I'm like, paying. You
Yeah.
you should be paying them to take the business. Like
Yes.
it's
It's bad
they
business. It
just
really is.
yeah, yeah, they just don't get it. But yeah, if you do you have any advice for new agents entering the senior market, particularly with like MedSup as a core product?
Well, I would say to people is, hey, you when you first start out, you gotta get your prospecting down. Whether that means going out to senior centers, that means working with your mentor. If you're doing seminars, I always like to do seminars. That way you
Mm.
can get in front of a big crowd at one place. I don't know if you do it in the doctor's offices or you're going to go into the malls or whatever. You got to be able to be out in public. You got to get involved within your community, is what I would tell people. And you got to be known. You got to get your name out there. And I don't care if it's doing flyers all the time, if it's just doing seminars all the time. You maybe need to sit in the doctor's office, sit in the mall. You got to expose yourself. You got to get involved in the community. When there's events going on, especially health related events, I would make sure I have a booth, a table. Sometimes you got to spend money to make money. And if you don't get
Hmm.
yourself out there, you're not going to make it. I can tell you
Yeah.
that. You got to get
Yeah,
involved.
I tell agents you have two choices. You can do the free activity if you don't have any money. And then if you have money, then you can save time because you can do the paid activity, but you have to make a choice. You have to spend time or money,
Yep, you do.
and it comes down to activity. And the good news is you don't need money because there's the free ways still work.
Absolutely. Just got to work a little
Yeah.
bit harder and more of it. But like I said, I'll take a hard worker over somebody that's just talented and they really don't want to do a lot. That hard worker, if they're out pounding the pavement, they're making their calls. they'll do just fine. They just, you got to stick with it. And there's, because I talk to agents all the time. They'll tell me, Mike, this first year I was going to quit 50 times. I said, well, you're going to quit
Yeah.
once a week. Yep, I was going to quit at least once a week. And you got to get past that fear. I always say winners never quit and quitters never win. And if you think
Yep.
about it, you stick with it. And no matter what we all do in life, that first year is always hard. I don't care if it's
Yeah.
running, if it's learning to walk, if it's learning to crawl. If you think about that, in that first year, don't get, I know it's hard to say, don't get discouraged, but stay positive, keep at it, because things will turn eventually, I promise.
Yeah.
Nothing's
It's
easy.
like Nick Saban always says, you can choose between two pains, the pain of regret or the pain of consistency.
Yeah.
I'm doing it every day.
And I would tell you,
Um,
Jason, that's too. If you are new into this business, you got to be consistent. You got to do what you need to do each and every week. You can't slack off in one area and expect for the results to be as good as they were. You just can't do it.
so your favorite prospecting method was seminars?
Yep, did a lot of seminars. Physician Mutual, we do a lot. We help agents with that. We kind of cost share it a little bit, So when they do the seminars, I think 1,000 piece mailing might be $500 a month, or so,
Hmm.
$500 for 1,000 piece mailing. So we help design the cards for them. They tell us where they'd like to work, and we can get a list of the people turn 65 or turn 67 or whatever it is in a particular area. And we try to do it at libraries, senior centers, things like that, where there's going to be seniors. And so we like to do that with people. We've had a lot of success with seminars.
Yeah. Yeah, I think Physicians Mutual definitely stands out. Like you have that extra arrow in your quiver that nobody else has. And
Yeah.
there's a lot of people that, look at insurance and analyze the big picture as far as cost, monthly costs, what they're paying in their premiums versus potential out of pocket. And it just becomes a math equation at the end of the day.
Yeah, and when people are,
So,
you said it earlier when people said, "Hey, just sell the cheapest plan. G is a G is a G." I tell people right up front in all my teachings that I do, and you got to see me teach. I just cringe at that because a lot of the Physicians Mutual plans, we have all those preventative benefits where we pay 100% of all preventative services not covered by Medicare, and we also will
mhm.
cover those services on a first dollar basis, and we'll cover them more frequently than what Medicare does. So when people say is a G is a G, but we're covering full blown routine physicals and labs and the thermography exam, the Cologuard, just some examples of stuff like that. You can't tell me is a G when Physician Mutual is covering that and other people aren't.
Yeah, a lot of people don't understand the new to Medicare, wellness checkup versus a physical. I mean, you don't
That's
get the
right.
panels. They don't understand the difference.
Yeah.
So
Yeah.
the fact that you also do that, I mean, that's saving an extra couple $100
Oh God,
for the
yes.
client
Mm-hmm.
as well. So
Yep.
that's awesome. Yeah. Any other differentiators that you see between Physicians Mutual and the competition?
Those preventative benefits, we turn back the clock. We call it age rating, whether you're 65, 66, 67, or 68 in most states. If you're 68 years old and you write somebody a Physicians Mutual plan, we turn back the clock and we give them age 65 rates. We don't catch it up later down the road or anything like that. We don't mess with them. Hey, they just go into that group that's 65 years old. And also
Mhm.
too, we have limited underwriting through age 68. We don't start full blown underwriting till 69. We allow you to write Medicare supplement 7 months in advance as long as the state allows. And then, too, I always tell people uh, is that we offer the household discount. If you're married and if you're not married, you can still get it if you have a roommate that's 60 years old or older. So we don't do joint policies or both husband, wife, whatever has to have a policy in the household. So it's just a few of those things that we do different. Probably another one that I don't know that anybody really does. I haven't heard that they do. We call it a 2-year selection guarantee. So no matter what plan a customer buys from us, whether it's the high deductible G, it's the innovative G that has the patent on it, the regular G, or a Plan F. No matter what plan they buy, we give them 2 years to think about what they bought. So it's almost like a 2-year free look. So they get to do it one time within the first 2 years. And so let's say they buy the Innovative, and all of a sudden a year later they don't like it. They can switch to the high deductible. They can switch to the G, and if they're old enough, they can switch to the F. No questions asked, no underwriting. We just allow them to do that one time within the first 2 years, because deft research will tell us that about 70% of all seniors today, their number one fear going on to Medicare is they're going to make the wrong decision. So we want
Hmm.
to take that fear away from them. And so, Jason, if you were selling somebody and they said, well, Jason, I want to think about it. If you were talking about Physicians Mutual, you could say, well, you know what, Mike? It's 2 years long enough to think about it. And they're probably going to look at you like, what are you talking about? We'll give them 2 years to think about what they bought. And if they want to switch within the first 2 years one time, we'll allow them to do it.
Yep. Yeah, that's a great way to overcome that common objection.
Yep, it is.
Yeah.
So we
Yeah, I
allow that.
usually tell people like if you hear that, it's because you didn't explain something properly or they don't understand something
That's right.
most of the time, right?
Yep.
So
Yep.
yeah, awesome, Mike. If you do you want to leave us with anything else?
I would say this. Hey, I greatly appreciate you having me and Physicians Mutual on your little podcast here and inviting us to
Yeah.
speak. I can't thank you enough, and we enjoy working with your organization, and hopefully we'll do more down the road.
Yeah. Well, thanks, Mike. You're the man. I appreciate you doing this, and we want to get the word out to agents because I think it's a great tool for them to have in the bag, especially
Sure.
with all the disruption coming up here
Oh,
in the
it's
next
great.
couple of years.
Yep. Yeah, if they
Cool.
need anything, they can always holler at me, email me, text me, call me. Doesn't matter. I'll help them any way I can.
Awesome. Thanks, Mike. I'll be in touch with you. It's
Okay.
great getting to talk to you again.
You betcha. Thank you. Have a great day.
Yep. See ya.
Okay. Bye bye.
If you thought this video was helpful, you can check this one out right here. We'll go over the next topic and we'll see you there.